Okay, so there's a list of the financial statements that we're going to learn about in this class and we're going to use. There are more financial statements, but these are like the big four that almost anytime you get a report on a business, it will have these four financial statements, okay? If you go on Yahoo Finance to learn more about a company you're thinking of investing in, like Freeport-McMoRan, Copper and Gold Incorporated, one of the largest employers in our county, right? They mine copper. You can go on Yahoo Finance and click financials, and it will have an income statement, a statement of stockholders' equity, a balance sheet, and a statement of cash flows that you can look at, okay? And so these four statements kind of constitute, if you remember yesterday, I said that accounting is sort of a language of the finance of a business. These reports are done in a consistent format so that anybody looking at them who's learned a little bit about them can tell what they mean, okay? So we have to learn that format and how these transactions we learned about yesterday, how they flow into these statements, okay? So like I said, the income statement is a summary of the revenue and expenses. And I was asking you before I had to turn on my recording, anybody remember what a revenue is? Just shout it out. You don't have to raise your hand. Okay, yeah, it's the income from selling products and services. That's what revenue is. Okay. So for Freeport-McMoRan, it would be the money they make by selling copper to a broader copper market, right? They go and find buyers and sell their copper to them. That would be their revenue. I, for years, owned a rental storage business. So our revenue was rental revenue, the money we collected from customers by providing rental space to them, right? And then expenses are the costs of earning revenue. So any money I have to spend to make that money, I'm going to call that an expense. Most common ones are payroll for my employees, things like insurance, things like utilities. I've got to have the power on, right? And so here at the college, our revenue would be tuition and what's called state aid. We get paid so much for each resident of Arizona who attends here. That's our revenue, and our expenses would be like my salary, the costs of having electricity and air conditioning and all of those things would be our expenses. The statement of stockholders' equity breaks down changes in the stockholders' equity. If you remember yesterday, I broke out stockholders' equity into common stock, which represents money that the owners have invested into the business, and then retained earnings, which was the revenue minus the expenses, minus any dividends that the business paid back to the owners. So that, and we'll see one in a minute. A balance sheet summarizes the assets, the liabilities, and the equity of a business. So if you remember the accounting equation we learned yesterday, assets equal liabilities plus equity, it's summarized on the balance sheet. And finally, a statement of cash flows shows how money came in and how money went out of the business. This can sometimes be a little different from the income statement because if you remember, sometimes we earned revenue, but it hadn't been paid to us yet, right? So on account, sometimes we paid costs for things, but we hadn't actually paid the cash yet. We were going to pay that later. So we need to differentiate between revenue that we collect right now during this month and maybe revenue we're going to collect later because you need cash to operate. Okay. So those are the four statements. Let me show you examples of each one, and then we'll do a couple exercises with them. Whoops. All right. So the one on top there is an income statement. And so their revenue account is called fees earned. If they were a retail business, like a store that sells stuff, it would probably be called sales or product sales or something like that. So there's different names for these types of accounts. And that's one of the hard things about accounting, learning that usually when it says sales or earned or anything like that, that's probably a revenue account, okay? And then their expenses, they had wage expense, that's money they paid their employees, rent expense, supplies, utilities, miscellaneous. So you'll see it has fees earned, the revenue, then they list all the expenses, and then they have a line that shows the total expenses, and then the revenue minus the expenses gives us net income. If your expenses are greater than your revenue, then that bottom line will not say net income, it will say net loss. It happens sometimes, right? Like a new business, it's really normal for new businesses to lose money in their first year, which means they have to have enough savings to keep the business afloat while they're growing their customer base, right? So this business had a net income. They made $3,050 in that first year. Our net income, so these little arrows, they're a little confusing, but what they're showing us is there's this interconnectedness between the statements. So the second statement here is the statement of stockholders' equity. The first line always shows the balances at the beginning of a certain time period. So this is the balances at November 1st of 2023. And then the last line always shows the balances at the end of that time period. So this shows the balance. So we can see by looking at this that it's for a month. Also in its title, right? We can see it's for the month ended November 30th. So this shows like this must be a brand new business because their common stock balance was zero at the beginning of the period, retained earnings, and the total was all zero. The business had nothing, no equity at all at the beginning of the period. We can see that they issued common stock. So the owners put $25,000 into the business, that they earned a net income of $3,050. And these arrows are showing us that that came off of the income statement. And then that they paid dividends, which again means they paid money out to the owners of $2,000. So at the end of the period, their common stock account now has 25,000. The retained earnings has 1,050, which is the net income minus the dividends paid out. And so now their total equity is 26,050. So what's great about this statement, if you're an investor, is it lets you see where the money's coming from, right? How much of that money, or where the equity. And remember, the equity, it's confusing, is the difference between the assets and liabilities. Or we could write it as equity equals liabilities. I'm sorry, assets minus liabilities. So the stuff you own minus your debts belongs to you. Does that make sense? If you have a car and you have a $10,000 loan on it and the car is worth $20,000, well, how much of that car belongs to you? Well, 10,000. 10,000 belongs to you, 10,000 belongs to the bank still till you pay them off, right? That's all that means. So here we can see of all the stuff that belongs to the owners, where'd it come from? Well, 25,000 of it came from the owner putting it in, and 1,050 of it came from earnings of the business that the owner didn't take back out. Okay. So when you create these statements, you have to start with the income statement because it has a number, net income, that you're going to need to create your statement of retained earnings. And then the next one you'll make is the balance sheet. And you can't make it until you do the statement of retained, statement of stockholders' equity. And so you can't make the balance sheet till you know your total equity number. So here's a balance sheet. It has assets, liabilities, and stockholders' equity. Assets, liability, and equity. We know that the assets will have to equal the liabilities plus the equity. If it doesn't, something's wrong, right? I always say learning to look for these things that should balance is like, do you have someone in your home? It's usually the mom in a home who's developed the skill of knowing when like milk has gone bad. So you're like, I don't know, mom, smell this. And then she's like, oh yeah, don't drink that, right? She has a good sniff checker. Because I don't know. I just have to rely on my wife. Otherwise, I'll be eating all sorts of weird stuff. But she knows. That's years of raising 8 kids. She's amazing, right? I think we can develop. I have a better accounting sniff checker than her, when I can look at numbers and be like, something's. And that's come from me doing it for like over 20 years, right? I just look at them like those numbers feel off. Something's not right, and then I can get into it. So the first thing to develop is like, hey, if these don't balance, if assets don't equal liabilities and equity, then something's off. I made a mistake somewhere and I'll have to go back. All right. So the assets they have are cash, supplies, and land. I don't, I don't like that's in blue. It's probably hard to see, but they have 5,900 in cash, 550 in supplies, and land of $20,000. So they have total assets of 26,450. They have debts. They have an account payable or a liability of 400, and then the total stockholders' equity we figured out on the previous statement, right? That our common stock was 25,000, our retained earnings were 1,050, so 2,650. So when we add the 26,050 to the 400 in liabilities, that should add up and match our assets, and it does. So what this statement tells us, it's called a balance sheet. I used to think it was because it has to balance, right? The assets equal the liabilities and the equity. Balance. I think that's a good way to remember it. But it's really called the balance sheet because it shows the balances of all the permanent accounts of the business. We'll learn later that like revenue and expenses are not permanent accounts, they're temporary. We reset them back to zero when we start a new month so we can start measuring our revenue and expenses again for that month. But the assets, liabilities, and equity, those stay. We don't reset them ever. They're permanent. So this is the balances of all of our permanent accounts. And again, that'll make more sense as we work with it more. Okay. Finally, we have our statement of cash flows. So this shows, if you remember, I said there are 3 types of activities in business yesterday: operating activities, financing activities, and investing activities. This summarizes cash we made from operating activities. So cash we received from customers, cash we paid to our creditors or as expenses, which gives us the net amount of cash we brought in from operating. Cash flows for investing, that would be cash we paid out for purchasing land, equipment, or other long-term assets. Okay, so they paid 20,000 out for the land. And then cash from financing activities, they received 25,000 from common stock. Financing means like borrowing or receiving from the owners to fund the business. 25,000 in common stock and paid out 2,000 in dividends. We add all those up, shows we had 0 cash at the beginning, and we have 5,900 in cash now. And that cash figure should match up to the cash figure on your balance sheet. All right. It's a lot of information. It'll make more sense if we do a couple of problems with it. Sorry for those of you who don't quite have it set up yet. And I'm willing to try and help you, but I'm just telling you, like, sometimes Cengage has, like, you have issues and there's not much I can do to move it along, and it just takes them a day to get stuff updated. It's frustrating. All right. So let's look, for those of you who have it up, let's look at your guided assignment. If you don't have it, you can follow along with me, or you can look on with a neighbor. Let's see. So I'm just going to go to modules. And then I'm going to click on guided assignment, chapter 1, part 2. Start the assignment. All right, question number 1. Imaging Services was organized on March 1st, 2025. A summary of the revenue and expense transactions for March follows. So all they're asking us to do here is prepare an income statement, and we don't have to do anything fancy because it's giving us all the numbers. We just have to figure out where to put them. Okay, so that's how this first one is set up. So what goes at the top of the income statement? Yeah, our revenue account, and this one's called fees earned. So mine's 482,000. Some of these problems, as they get bigger, you start having to scroll a lot, which I could tell frustrates people. A lot of people will take a picture of it, like with their phone, the top stuff, and then so they don't have to scroll back and forth. I wish there was a better way, but there aren't. And then the other thing on an income statement are all of the expenses. So we have wages expense, rent expense, supplies expense, and miscellaneous. I think supplies expense is like an expense you didn't expect. Like supplies, you have an expense. Thanks. There was like a couple pity giggles. Pretty good. I'm a grandpa. I'm used to living off of pity laughs. All right. All right. Wage expense is 300,000. Rent expense 41,500. So I'm just taking these numbers directly from what they're giving us. 3,600 and miscellaneous was 1,900. Anybody have a calculator can add those up real fast? You already did it? Even? So all we did was we just added up all the expenses to get total expenses. I know that for some brains, you're like, that's common sense. Of course, you would add up all the expenses to get total expenses. But other people would be like, I don't know where you got that number from, right? So that's why I'm telling you. All right. And then our net income then would be our fees earned minus our total expenses. Anyone? Yeah. 135. That sounds pretty good. Check our work. We got all green check marks, which brings joy to the heart of all the little children and the big college kids both. Right. And then we'll go on to the next problem. So now we're given financial information related to Ebony Interiors for February and March 2023. So they give us cash, accounts receivable, supplies, accounts payable, common stock, retained earnings. And then it wants us to make a balance sheet. So sometimes it's helpful, at least for my brain, to kind of categorize these. Like back in the old days when we did this on paper, I would just write next to them, like, what type of account is cash? And I'd write a little A next to it for asset. All right. Accounts receivable, asset. Supplies, asset. Accounts payable, liability. Pretty much anytime you see an account with the name payable in its name, that's going to be a liability because it means it's money you owe that you have to pay to somebody else. Okay. So I'd put a little L next to it for liability. Common stock. What kind of account is that? Yes, a stockholders equity account or just an X. Sometimes they'll say stockholders equity or sometimes they'll just say equity. Okay. But again, and that represents the money paid in by the owners. Okay. And then retained earnings, also equity. That's the money the business earned. Okay. All right. So our assets are cash, accounts receivable, and supplies. And since we're doing February, I'm going to use this February column. So what we got there, 1150. So 1 million. I could do that one in my head. If it gets any more complicated, I'll be in trouble. Our liabilities. So we have accounts payable of 310,000. And our stockholders' equity, we have common stock and retained earnings. The common stock is 200,000. But it gives us a question mark for retained earnings. So how do you propose we go about figuring that out? Anybody have an idea? Thanks for the head shake, which lets me know I'm not waiting on you, right? Because you're like, I don't know, just tell me, Fox. Anybody have a thought on how we could approach it? So step one, we know that our total liabilities and stockholders' equity has to equal our total assets. Why? Because the accounting equation, assets equal liabilities plus equity. So this number right here, total liabilities and stockholders' equity, is going to be the same as this number right here, total assets. So I'm just going to copy and paste it. So there's a starting point for us, right? We also know then that the total of liabilities and stockholders' equity is going to be this total of liabilities plus this total of stockholders' equity. So I could take that 1,150,000 and subtract the liabilities of 310,000. And that's going to give me my total stockholders' equity. What? 850? 840, yeah. And now I know my stockholders' equity is going to be my common stock plus my retained earnings will equal stockholders' equity, right? So since common stock is 200, what must retained earnings be? Anyone? So this plus X equals this, 640,000. So what does this tell me about them? That they've got $1,150,000 in assets. 310,000 of those assets are funded with debt, and the remaining 840,000 of those assets are funded by equity or what the owners own. Okay. Now we're going to do the same thing for 2023. So again, same asset accounts, cash, accounts receivable, and supplies. But now the number is a little different. There's 380,000 in cash. See how the scrolling becomes annoying? 960,000 in accounts receivable and 35,000 in supplies. And I get 1,375,000 as total assets. Liabilities of accounts payable of 400,000. And then stockholders' equity, we're going to have common stock and retained earnings. Common stock of 200,000. And then retained earnings, we don't know, right? Question mark. Am I going too fast? No, we're okay. Am I going too slow? Am I boring the freak out of you, right? Like I never had any freak in me. And I'm like, whew, I didn't need to know that. All right. So I know then that my total liabilities and stockholders' equity should equal my total assets. So I'm going to take 1,375,000, put it down there. Then I can take 1,375,000 minus 400,000, and that will give me the total stockholders' equity, right? Which should be what? 900 and, all right. That doesn't sound right. 25? Is that right? I don't know. I better double check my math so I don't look silly. That is nice. Yeah, you're right. My bad. All right. And then now my total stockholders' equity is 975,000. My common stock was 200, then my retained earnings had to be 975 minus 200, which is $775,000. So on these guided assignments, there are unlimited checks. So sometimes you'll get these problems with multiple steps, and it could be valuable to check if you're right before moving on to the next step. Does that make sense? And then on your homework assignments, I know it's a weird number, but you have 6 checks. And for some problems, it's way too many. For some, you wish you had a couple more. But I set it at 6 because, well, for some of the big problems, it's nice to have multiple checks, but I don't want to give unlimited because I want you to have to put in the effort. Some people will start abusing checks and like try like 100 times instead of just like figuring out the right answer. So that's why 6. So I'm gonna use a check right now to make sure I didn't make any mistakes. So that all looks good. But now I know I have good numbers there for answering the last 2 questions here. So determine the amount of net income for March, assuming that no additional common stock was issued and no dividends were paid during the month. So this depends upon us knowing or recognizing that our changes to retained earnings, that retained earnings equals revenue minus expenses minus dividends. So that's the first thing we need to know. The second thing we need to know is that revenue minus expenses is another nifty way of saying net income. So we can write retained earnings equals net income minus dividends for the month. Total retained earnings equals beginning retained earnings plus net income minus dividends will give us our new retained earnings, right? So to figure out our net income, then all we have to do is look at the change. Let's see, the change in our retained earnings, because it said no additional common stock. So if we say, okay, up here, our retained earnings was 640,000 at the end of February. Also, just as like something to get used to with accounting, the end of one period, so last day of February, is also the beginning of the next period. So if we're like, I don't know what the beginning of March was. Sure you do. It was the end of February. Same thing. Okay. So at the end of February, beginning of March, our retained earnings was 640,000. And then at the end of March, our retained earnings was 775,000. So if no dividends were paid, the only thing that changed there was the net income. Okay. So if I take 775,000 minus 640,000, that will tell me the amount of net income that the business had during that period. Was 640, right? Yeah. So was that 135,000? And then for C, it says determine the amount of net income for March, assuming that no additional common stock was issued, but dividends of 50,000 were paid during the month. So if we were going to do that, then we'd have to say the retained earning, or in this case, the change in our retained earnings, right, which was 135,000, equals our net income, which is what it wants us to find, minus the dividends of 50,000. So in order for us to have paid a dividend of $50,000 and have our retained earnings still go up by 135,000, we would have had to make a net income of 185,000. Because we would have had to make enough money that we could afford to pay 50,000 out to the owners and still have our retained earnings go up by 135,000. Okay. So these little problems like this are about learning the interrelationship between all these numbers. So it helps me as a learner. I don't know if it'll help you, but it helps me because you'll do these problems, and most of these problems are made by the textbook publisher. Like I'm not custom making these, but I am custom picking them. They give us hundreds, and I go through and choose the ones that I think. So if you're asking yourself, like, what's the teacher trying to teach me with by choosing this problem? What's the textbook publisher trying to get at? And if you start to recognize, oh, they're trying to show me how these things interrelate, that helps me like learn better instead of just being like, this is just this thing I have to go through, right? And I know anybody who's a professor has gone to tons of school. I know there's days when you just got to get through the work and not think deeply because you got to get on to other stuff. But when you have time and can put in the effort, try to do that. Try to be like, okay, like what was I meant to learn from that? And do I feel like I understand that concept? Or did I just, because especially with checks, you can just like work through it and like not let any of it penetrate. And then at the end, you're like, not any smarter than you were at the beginning. At least I can do that. Maybe you guys don't. But one of my sons is like an expert at that. Like you can lecture him for an hour and he heard nothing. He can like turn off his brain but still look like he's engaging. This Nephi, Nephi. You're like, dude, so you gain nothing from this. You just started talking and I knew it was gonna be a lecture, so turned it off. Come on, you've done it. All right. Like never. I always listen to my parents perfectly. All right. So to kind of try to bring together now what we looked at yesterday and then what we're looking at today. Yesterday, we were kind of like creating this where we would record our transactions as we went. Oh, that one increased cash and, decreased cash and increased land. We invested money in land or whatever. Remember, we were doing those transactions. So the totals or balances at the bottom of all those transactions is where all these numbers come from. So they had cash, supplies, land, accounts payable, stockholders' equity, and common stock and retained earnings. And then all of that information flowed down to these different statements that we're learning about right now, right? The revenues, well, they came from here. That's what they're trying to show us with all these crazy arrows. The revenues come from retained earnings. And the statement of stockholders' equity information all comes off of there, 25,000 and 50. So ultimately what we're trying to get to is where we can record transactions and then take those transactions and create financial statements that allow us to communicate financial information to other people in a way that is consistent and that is transparent so that it truly reflects what our business is doing. This whole course, financial accounting, there's two broad categories of accounting. There's more than two, but the two big ones are financial accounting. That's what this class covers. And then what's called managerial accounting, which is what accounting 2 covers. And financial accounting is really accounting for other people. In other words, we're producing financial information that we're going to give to others to communicate something. Okay. The people we typically want to communicate to are investors, people who are putting money into our company, want to know what's happening financially with our company, to lenders, people who are loaning us money want to know, to the government, the IRS wants to understand where your money's coming from and going so they can tax you, right? I love paying taxes and so forth, right? If you start to think of who might be users of financial information, that's what we're preparing these for. And that's why there's this kind of focus on this is the format we always use so it's consistent. When we get to managerial accounting, you'll see that like it's not so much about a consistent look and feel. It's more about how do we use this information to make decisions to improve the operation of our business. That's what managerial accounting is. I like that one better personally. But anyway, so last thing, we're going to work on this last question in the guided assignment to see if we can show how these things are all brought together. Oh, actually, yeah. So we're just going to do this. So we just did the income statement and the balance sheet, and now we're going to do a statement of stockholders' equity. So This is financial information related to Organic Products Company for the month ended June 30th, 2019. Prepare the statement of stockholders' equity. So we can see that they had net income of 115,000. They paid out dividends of 25,000. Remember, all dividends is money that we pay out of the business to the owners or to the stockholders. Okay. If you invest in a business, what they do is they set a dividend. We're going to pay this amount to shareholders, and then they divide that by the number of shares that the business has outstanding, and then that's the amount you get per share. And then if you have 100 shares, they multiply it by 100 and send you a check for that amount. They don't really send checks anymore. You have an electronic account and they deposit them in there. But that's how it works with big companies. We have our common stock amount at June 1st, the amount of common stock issued during June, and then our retained earnings at June 1st. All right. So these always start with the balance at the beginning of the period. And they'll use that term a lot too, the period, which just means the time period we're talking about, which is June. And then they always end with the balances at the end of the period. So sometimes on these, it's hard to know how to start. So I always start with like what I know, which is like that it's going to start with the beginning and end with the end, right? And then I can try to build it from there. And then we're going to have that we issued common stock and that we earned some net income and that we paid out dividends. You'll notice the pattern of these is always really like the same. Also, if you're trying to do the homework and you get stuck, don't forget you can click on the textbook and there's examples of each of these. Because if you're like, I have no idea like what order to put these in or how it's laid out, you can go look at the example picture in the textbook. For some reason with these ebooks, it's really easy to forget you have a textbook to reference. I don't know why, but it's probably because it just seems like a hassle to have to click on it and go in there, right? So, but just that's the best place to look for a reference if you're like, I don't know how to start this. Typically they are. I will say that like on this program, you'll see that it doesn't give us any option that would fit. Like fees earned would be on an income statement, expenses would be on an income statement. So that's their way of forcing us to only do that one, is they only give us one option that would fit there. But again, as you're first learning it, that's not as obvious to you, right? You're just like, I don't know. So yeah, they're typically in this order. And that's why I say go look in the book if you get stuck, because it will show one that's in that same order. All right. So our balances at the beginning, we had common stock of 180,000. And we had retained earnings of 1,630,000. So this is not a brand new company, right? They've been operating in the past. We can tell because they have retained earnings from some previous time period. So we'll just add those up to get the total, which should be why is my brain not working here? 1810, 1,810,000. Maybe someone should do their maths, make sure I didn't do that wrong in my brain. You ever have like slow brain days or fast brain days? Like days when your mind's just clicking, and other days where you're like, I can't even think. Right? It happens to me all the time. Just so you know, the slow ones become more prevalent as you get older. All right. We issued common stock. So common stock issued was 50,000. So we put that in the common stock column. We paid, let's see. Oh, we had net income of, sorry, I think I skipped around. Net income of 115,000. So I'm going to put that in the net income row under retained earnings. Why? Because net income impacts retained earnings, not common stock. Common stock is just money put in by the owners. And then dividends, we paid 25,000 in dividends. So I'm going to put that as a negative because dividends reduce our retained earnings. And remember yesterday I said that revenue increases our retained earnings and expenses decrease it. Well, that's how, because revenue increases our net income and expenses decrease our net income. All right. So now all I'm going to do is total these rows across. So my issued common stock total is 50,000. My net income, 115. My dividends, negative 25. And now I'll total my columns. So my common stock was 180. We issued another 50,000. So now our new balance is 230,000. Retained earnings. We had a balance of 1,630,000. We added 115,000 and we paid out or issued dividends of 25,000. So it'll be 1,630,000 plus 115 minus 25. Which should be 1,720,000. Anybody got that? And then this one, we could either total the column or we could total the rows across. Either way, it should come out to the same answer, which I got what, 1,950,000. Since I did a lot of that math in my head, I'm going to use a check just to make sure I didn't make a mistake. But I didn't because, well, apparently today is only a moderately slow brain day. Everybody follow where I got those numbers from? Yeah, okay. All right. Why is the statement of stockholders' equity prepared before June 30th, 2019 balance sheet? And the answer is because we need to know the equity totals before we can prepare our balance sheet. Why? Because there's equity shows on the balance sheet, right? So we've got to know, since it changed during the month, we've got to have the new numbers for equity. So when we make the balance sheet, we can put them in there. So it's going to say something like the statement of stockholders' equity is prepared before June 30th. You have to use an accent. 2019 because the balance sheet because blank as of June 30th are needed for the June 30th balance sheet. And we'll say common stock and retained earnings, right? Those equity items are going to be needed. Bam. We've got an easy 100%. We submit it for grading. We pray for our brothers and sisters who do not have Cengage yet. You don't have to pray if you're not religious. You can just spare a moment of thought for them. You don't have to pray. Consider them in the way you are accustomed to considering others. How's that? Anyway, so that's it for today. I know it's a lot of stuff, and that just as a warning, this course doesn't slow down. It packs on this much each week, and so it's a lot. But it's a lot of good information, especially if you're going into business. Even if you're not going to be an accountant, just understanding how the money flows through a business is a valuable thing, even if you work in marketing. And if you do want to become an accountant, you're going to have to do a lot more training, right? Because it's more specific. And even then, you get to the place where you're going to work and you're like, oh, you do these things a little different. And you have to do on the job training too. That's every job, though. All right. Have a great day. There's no class tomorrow. Remember, on Thursdays, we don't have class. And Friday is a day to work on this assignment. If you get the assignment done before Friday, you don't have to show up. But if you don't show up, I'm going to go in the system and look. And if you have it done, then I'll mark you present. And if you don't, I'll mark you absent. Does that make sense? All right. And if you're a student athlete worried about it, you could send me an email too saying I did it, if that would make you feel more comfortable. But all right, have a great day, everybody. Let me stop recording. All right.